Welcome everyone to session 2. I'm gonna have to remember not to pick my nose because my video is on. Yes, I'm still a little fuzzy tongued after last night's sortie here in Vietnam. This is session 2 of Options Players Fundamentals course, and you can see the contact names of myself. Changed my email to michael@optionsplayers.com just for a little bit more clarity. We got Greg on, and we got Steve Platt also. Everyone knows Steve. So let's get started. I'm going to start with a disclaimer. I'm just going to read it right off. Optionsplayers.com is not an investment advisory services, nor are we registered investment advisors or broker-dealers, and do not purport to tell or suggest which securities customers should buy or sell for themselves. Customers should always check with their licensed financial advisor and their tax advisor to determine the suitability of any investment. It should not be assumed that the methods, techniques, or indicators presented in these webinars will be profitable or that they'll not result in losses. Past results are not indicative of future results. Examples presented in these webinars are for educational purposes only. These setups are not solicitations of any order to buy or sell. The authors, publisher, and all affiliates assume no responsibility for your trading results. There is a high degree of risk in trading. Okay, we made the lawyers happy now. So let's get going. Again, everything we're presenting here is for educational purposes, and we do present some case studies that generally are in the past, are very close to real time. But please don't go off and say, "Hey, that looks great, and I'm going to trade it." Okay, these are your decisions. We're just kind of doing this so you get a better feel for the mechanics of what we do here at Options Players. So just looking at the schedule, we did the recorded session 1 on Tuesday night this week. We're having a few issues in editing, and I did get a rough cutout to everyone. You should have gotten that, but we are going to be editing. For some reason, it didn't edit all the way. So we're going to be doing that over the weekend or next week, and possibly doing it for all 3 of these sessions to then get them out. So apologize in advance for the delay. If there's anything you really just are burning want to go over right away, we can get you a rough cut. But there's going to be these little quirks of people coming and going, or doorbells ringing when the maid comes into my room, so on and so forth. So last week we spent a huge amount of time on money management. Got a lot of comments that the people loved it because everyone needs that reminder. And like I said, I do too, and I know Greg does, and I know Steve does. When to take profits and losses. And then we went into some basic options, calls, and puts. We're going to delve into that a little bit more today, but we're also going to make that second reminder of money management. But we're going to go a little bit further in money management. We're going to talk about creating and following trade plans. We'll present how we do that to keep it successful. And then we'll present a couple of case studies and a couple of profit and loss stories. So hopefully you guys get a chuckle out of one of them because it comes straight from chat. Okay, so next week, recorded session 3 will be, I believe, on Tuesday evening. Greg is going to lead this. He's gonna review the money management just like we do tonight. Any other kind of review that might need to be done, and then he's going to spend the entire session on basic technical analysis. It is very difficult to do a 1 hour on basic TA, but this is really kind of almost a precursor to give you an idea of some of the things that he goes through in his 6-week class. Tonight I'm going to give you a little precursor of what I do in my 6-week class. And he'll present a couple of option case studies based on that technical analysis, and present some profit and loss stories. Okay, and then next Thursday we'll have a live session. Okay? That'll be our first of many live sessions that are going to be on the 2nd and the 4th Thursdays of the month. And Greg and I will trade off. Maybe we'll have Steve do one. Maybe we'll have Trax do one. I don't know. We'll kind of play it by ear, but we'd like to have a live session every other Thursday to, number one, remind us of the rules that we're presenting in these 3 sessions, but also kind of look at the market as it is right then and say, hey, what do we see? And do some Q&A. And we'll see if we can get some actionable case studies as well for a long and a short. Unfortunately, I didn't get a chance to look at the market this morning when I woke up. I barely got up and to get my breakfast. Okay, so like I said, I'm in Vietnam this week, chasing orders. So let's just do a real brief review of money management. Just make sure we got the chat up and we don't have any burning questions right at the beginning. Let's see, chat. We got 9 chats up there. Okay. Okay, that's all old stuff. Okay, so let's talk about money management again. What is going on with Zoom? Okay, I like to do this, and I like to put this on my wall. I just invested in a whole bunch of whiteboards and bulletin boards in my office, and I put them up, and I've actually pasted this thing up. I really need to remind myself of that. 10% loss necessitates an 11% gain to recover. That is very doable. This is actually probably the biggest reason we say, take your loss at 10%, you can recover. Okay, 25% loss takes a 33% gain to get back to break even. 50% requires 100% gain to recover. And 80% necessitates 500% in gains to get back to where the investment value started. So the open question I'm going to pose to the group, and you can throw it in the chat and everyone can hopefully see it, is how many of you have done something called all in? How many have done an all in? We're getting some chats up right now. Yep, of course we have. And how many of us have lost because of that? You go all in and you lose 80% of your account, you gotta increase your account by 500%. Okay, this is why we don't go all in. And I can tell you, I've been all in twice in my trading career in the last 10 years, and I regretted it each time. Okay, I went all in after I made a bundle of money in my first couple of months, and I lost over $100,000 in one trade because I went all in, and I lost. I was pissed off, and it's what made me invest in training, additional training. So we don't do this. Okay, we're focusing on losses of 10%. So as we mentioned on Tuesday, we in options players, we lose money every day, but we make more than we lose. But let's just review why people do lose money, and it is very much related to the all in. First of all, they don't have a plan or rules, and we're going to go into that in this session about planning. How do we go through planning to get into a trade? The second thing is they let their losers run and they cut their winners short. Well, that's actually directly related to that right there. If you don't have a plan before getting into the trade, a plan to exit at X% loss, or when a stock does a certain thing, and if you don't have a plan to exit when it does what you think it's going to do at a given profit, or if a stock goes to a certain level, or it hits a certain time, this is what's going to happen. You're going to let your losers run, and then you're also going to let your winners short. You cut those winners short. You're just going to get out, saying, "Oh, it's going my way. I better get out." So then what usually happens is we go all in desperation, especially the inexperienced ones. If you don't have a plan, it's so much easier to go all in. And we don't want to do that. We do not want to experience 50% loss. We don't want to experience 80% loss, especially if we got a huge portion of our account into a particular trade. And I've heard this over and over and over the years, and I've seen it in the chat where, and I've seen Steve actually sent me a couple of emails here and there. I'm so sorry. I really love option players, but I need to cancel my membership because I blew my account. That is unacceptable for us. We do not want to see failure in options players because then we lose members. So this is one of the core reasons we're doing these sessions, is because we want to make sure this stuff is hammered home, that we don't want to lose more than 2% of our account in any one losing trade, especially if we have just a couple of years experience, less than a couple of years experience in trading. And we need to calculate our position size accordingly. And then there's a second rule, and it's just as important as the rule number one. Follow rule number one, okay? You need to set this number according to your comfort level, but I can tell you right now, even with my larger trades that are more swing trades, I don't want to lose more than 2% of my account, okay? I do have some systems where I'm comfortable enough in the long-term results of the systems that I'm comfortable losing 5% of my account because I know that I've got some other big trades that offset it. But in general, on regular trades that are outside of my core systems, my core couple of stocks, I never, ever, ever position size myself to lose more than 2% of my account. Okay, and what that 2% does is it gives you 20 chances. It gives you 20 chances to be wrong, okay, or 20 chances to be right. Okay, it's and if we're 50-50, like we showed last week, if you're 50% right and you maintain very strict rules of where to exit at a 10% loss and also take your gains at 20%, you can't lose. You cannot lose. Okay, it is the core of trading. So, text play position size. I'm just going to throw this out there for those of you that maybe have smaller accounts. If you have a bigger account, I don't think I would make 20% of my account on a text play. But if you're trading text plays only and you want to grow your account in a very good, sustainable way, put up 20%. Try to keep your losses at a maximum of 10%. Okay, you keep it as a mental stop. Okay, you keep it as a mental stop because if you put in a stop loss, the market makers are going to see that and they're going to take you out. So keep it at a mental stop, a little bit loose. But when you see that your prognosis or Steve's prognosis went wrong, you put your order in and you take your loss. And sometimes it'll be 11%, sometimes it'll be 12%, sometimes it'll be 15%, but sometimes it goes the other way and you get out at -9 or -8. But when you see that loss come on a particular trade at 10%, just take it. Don't wait for Steve. Don't wait for anyone. We are making our own decisions on our exit, and I think the rules should be very clear that the rules state is we are going to take our loss at 10% and we're going to take our gain at 20%. Okay, so the account drawdown potential when we take a 10% loss on a 20% position size is 2%. Okay, that's why we're using that number. And as you saw the Excel sheet that I put up on Tuesday, if you do that, you're going to grow your account very, very, very quickly. Okay. Take profits based on categorical targets. And so what I'm leading up to here is I'm leading up to a trade plan. Now you can take those profits based on a profit target, and that's what we do with text plays, 20%. But you can also be based on a stock reaching a certain level from a technical perspective. And I think Greg next week will show you a little bit more about how he perhaps determines where that technical level might be. Now, this is not on the text play. This is maybe on some other plays that you might want to be taking if you are inclined to trade more than the text play, or if you get into Green Goose, if you go beyond Green Goose. Quite frankly, you don't need to trade more than the text play or even Green Goose if you get into that. It just causes confusion and makes you do silly things. Even I don't trade more than maybe 2, 3, 4 positions max at any one time. Okay. So when do we take profits and losses at options players? As we stated last week, we're taking 20%. And I know I'm harping on this, but we've got to be reminded of this so that we stay focused and sustainable in our trading. And then we don't accept losses more than 10% whenever possible. Okay? We know that. Okay. Are there any questions? I hope there's no questions on this. I hope we're being categorical enough. We better be. It is so important. It is, for me, I'll tell you right now, it is the absolute most important thing about trading for me. And I need to constantly remind myself of that, because otherwise I go rogue. Okay? I almost went rogue last night, actually. Well, I mean, the close of your morning today, I almost went rogue in my green goose trade. I let it go for a long time. I eventually recovered, but I didn't do it in a very good way. So I'm probably going over this stuff right now more than I would normally do, just because I know darn well I need to remind myself of it because of what I did myself. Okay? So let's go into some basic options. We talked about calls and puts, what they are, but I really kind of want to go into. First of all, I want to dissect an option a little bit, and then I'm gonna pull us back and say, do we really need to dissect that option to be successful? And I'll ask an open question. So what goes into an options price? Okay, first of all, we know that an option is a derivative, right? It's a derivative on a stock. Okay, we have options on SPY, we have options on Apple, we have options on Facebook, so on and so forth. So it is a derivative. So it doesn't have a fixed price at all the time. Okay, there's things that go into calculating an option. Okay, first of all, we've heard about delta. Okay, delta, you need to think of it as direction. Okay, it helps us determine which direction. Okay, delta is the rate of change of an options price given a $1 increase in the underlying, and I'll go into that in a separate slide. Hey, gamma, you've heard about gamma. Now, Trax has got, he and a couple other guys developed a method of trying to figure out which option is the best to choose based on how fast it would actually gain value. And actually, that's gamma. Okay, you can look into your broker and you can look at an option chain, and hopefully you got the ability to look at delta, gamma, theta, so on and so forth. So gamma is acceleration. It is the rate of change in delta given a $1 increase in the underlying. Okay, so it's how fast does delta increase as the stock price goes up. Theta, we've all heard about theta. Okay, this is a rate of decay of an option in dollars per day. So if you say a theta of negative 0.02, that means that option price is going to reduce by 2 cents in 24 hours. Okay? That's theta. And then we have vega. Okay? Vega is related to volatility. It is the rate of change in an options price given a 1% move in the implied volatility. Implied volatility, it needs to be thought of as the supply and demand of an option. And there are times when volatility goes up, like before earnings or a couple of days before earnings, or as many as 10 days before earnings. And that volatility increase is going to increase the value of the options, and it's going to be based on vega. Okay, so there's going to be a vega number that shows you how fast an options price goes up if the volatility goes up, okay, or goes down. Because on earnings, a lot of times volatility will crush. You've probably heard about volatility crush, where a couple of names. Let's think about NVIDIA. NVIDIA will crush volatility by 50%, and your options value lose massive amounts of value. Okay, so then we need to overcome that volatility crush with price move. Okay, so in each of these, you're going to have a changing value of the options price based on each element. Okay, the first one is delta. Okay, so I'm gonna take a look at a SLV call, and this is an SLV call. I think it's a SLV 1027 1550 call, and this is on Monday on Tuesday to close. Is that right? The 4th of October. So SLV at the time, at the close, was $15.69, and the delta was 0.63. What that means is if the options price is, let's make this easy, 0.37, which it actually was. If the stock goes up to 1669, that is a $1 increase. The delta of 0.63, all things being equal, is going to increase the option price by 63 cents. So that option price would be worth, if it happens all in the same day, that options price would be worth $1. Okay? This is why we love to trade options, because we just got almost a triple on that if we happen to go up that much. That's a huge percentage gain, by the way. Gamma. Okay? Gamma, as I mentioned, is an accelerator of delta. So the gamma in this example was 0.4. What that means is that if the price goes up to 1669, the delta at that point here has gone up 40%. Okay, so now we've gone up 40% of 0.63, so now our delta is 88. And this is ever changing, obviously. So if it goes up 50 cents, you're going to have a higher delta. So actually, your options price, if you factor in delta in gamma, your options price is going to go up even higher than 63 cents. And it's going to go up a lot higher. So until which point actually your delta becomes almost 1. If you go to theta, this is also going to affect the options price. The theta of this particular option was 0.0056. That means that in one day, it is going to lose half a cent. I'm missing a zero here. It's going to lose half a cent. Okay, so do we really need to think about theta in this case? No, not really. And then we have vega. Vega is related to the increase in volatility. So if the implied volatility goes up 1%, the vega is going to increase the options price by 1.5%. So if we go up 1% in this case, our options price only went up 1 cent over and above the factor of the delta, the gamma, and the theta. Okay, so then we're going to get a curve basically that is constantly moving. We don't have a straight curve. You've seen in the risk graphs that I showed, the curve looked like that on expiration. But what we get when you start factoring all of these things is you start getting curves like this, okay, based on theta and time. Now, the question is, the above goes into theoretical calculation of the options value, but what is it that we really need to know in all of this? And I'm going to pose the question. We need to figure out a way to do surveys on these things, Greg, but I'm going to just pose a question. Is there one out of all of these that really we need to be aware of and take into consideration? And do we really need to factor in the other things in our trading? Where's my chat? What do you guys think? Okay, Vadim says delta. No one else? Well, okay, tracks, yeah. Okay, yeah. Okay. If we're going to be in an options trade 1 or 2 days, a swing trade, do we really need to care about theta? Especially if we're in an option that's a couple weeks out. No. The answer is delta. I mean, very clearly, we need to be thinking about delta and really only delta. Okay. Now there are, obviously you can look at the gamma in the accelerating factor when you're choosing which strike to choose. But really, for me personally, I don't like to trade options with deltas less than 0.4. Okay. I also don't like to trade options greater than 0.7. Okay, so my general rule of thumb personally, and everyone's going to be different. My general rule of thumb is I don't trade options unless there's a delta between 0.4 and 0.7, which actually is at the money. Okay, this delta here is at the money. I mean, you're dealing with a 1550 strike. But your delta is 0.63 because you're a little bit more expensive than 1550. So your delta is 0.63. This is, for me, this is at the money. Okay. That's what I trade. You're going to have your own personal preferences, but I can tell you most people that have been in this game a long time do trade options that have that delta. Okay, so let's go on. I'm going to use this as part of a case study on SLV. And I don't want to preempt Greg and his TA analysis, so I'm going to give you something really, 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 really basic. I love trend lines when I'm looking at maybe some of the longer term things. And I also like converging trend lines. And I've identified as a potential converging trend line and also a little triangle. I've identified this area as maybe it could be a long. Okay, we got something that's kind of touching below here. We got kind of a longer term here, but we also have an overhead resistance that maybe, I don't know how strong it is, but there is room to move between, let's see, there is room to move between here and here. Okay, and if we're really lucky, it goes above that. And then we also have this little 10, the red line is a 10 SMA, and maybe it'll act as resistance. I don't know, but this could be a trade. Okay, so this is not today, by the way. This is yesterday. This is yesterday. Let's see, a couple of chats coming up. Oh, by the way, Cool31 says, why 0.4 to 0.7 delta? How much gamma doesn't matter? It doesn't really matter. I mean, gamma, you don't need to look at it. We don't need to be in that professional level on gamma to really make the choice. Just be aware of the delta. I like 0.5 delta because for me, that is the most bang for the buck. And it gets us the fastest and the largest ROI. That's just me personally. So anyway, so SLV right now, or at least a couple of days ago, presented a case and saying, yeah, I think I might take a long on this. And I'll tell you why I'm thinking about this. And this all comes down to how we're going to look at our trade plan. The reason I'm looking at a long here is because I have a very clear area of not necessarily where it's going to go, but where I'm wrong. Okay, I am wrong if SLV breaks those lines. Okay, and that tells me that if I'm wrong, if it breaks those lines, I'm going to get out. Okay, and my loss in this case may be more than 10% if I follow only that, but it may be less than 10%. But if it breaks the line and I'm at a 5% loss, it broke the line. I'm going to get out. And I only lost 5%. But the reason is it told me I'm wrong. Okay. So what we're going to do, oh, there we go. I made it a little bit closer. So this area here is where I'm wrong. So if I see it close below any one of those lines, I would think about getting out. Okay. So it starts with TA, where we think where we don't want it to go, where it's going to be wrong, and it also gives us a projection of where we think it might go. And the question is, can we profit from doing it? So what I do is for every trade, even Steve's trades, I've got one of these things out. I don't take a lot of Steve's trades because I'm usually sleeping, but I put a trade plan together and I post it on my wall. And I've got a bulletin board and I've got my trades there because I don't want to forget I've got them. Because I had several years ago, I actually forgot I had a trade. And I got exercised and I was stuck with a whole bunch of shares that I didn't want. So I post these things on the wall. So it starts with a date. I don't necessarily need to give you guys this format because you can do this yourself. It starts with a date. Okay, this is October 4th. So it's today for you guys is the 5th. So it's yesterday. Timing of the trade, end of day. Underlying is SLV. We had a closing price of 15.57. The strategy is a long call because that's all we're talking about here. I'll go into the options choice here in a second, but position size on this one, I'm going to say is 10% of my account. Okay. And the entry trigger was the end of the day candle, 1 minute before close. Very clear. I want to write these things down. And then the entry, what's the entry rationale? Why did I get in? Well, as I mentioned, I believe that there are converging channels. So I want to know, why did I get in? It's converging channels and there's some lower support. Now, the next thing I want to know is, where am I wrong? What is my technical stop? Okay, well, I define that technical stop as one daily close below the first descending trend line. I do have a technical target. My technical target is the 10 SMA. You can look at that. It's coming up. It's coming down here. If we happen to go up there, if we hit that, I'm going to get out. Okay? So I'm clearly defining where I want to get out. But I'm also clearly defining that if that technical stop doesn't happen and I do have a 10% loss on my option, I'm also going to get out. But I'm also going to have a target of roughly 20%. Okay, so either one of these things is going to happen. Either my technical stop is going to happen, or my 10% loss is going to happen, and either the 10 SMA is going to be hit, or my profit target is going to be hit. I also have a time stop. Okay, my time stop is Friday, October 6th. I think this is a short-term. I think it's a very short-term opportunity that I want to make that quick 20%, but I want to do something different. Okay, I'm also looking at the additional. If I see the right conditions and the profit target is hit on Friday or by Friday, what I would probably consider doing is I'd probably consider selling 75% of the contracts at that profit target, and then setting a trailing stop back to break even for the remaining 25% to see if it goes. So now we're going to take a look at the option. What option is going to allow us to do that? Okay, so I've already set up my trade plan, and now I'm going to choose my option. Now your broker is going to have a lot of different ways. I'm not sure which brokers you use, but I can tell you I use Tom's Options Tools a lot. I love the thing, and if you want to know more about it, just let me know. I can get you a referral to them and everything. But I use it a lot. Okay, so I am going to be looking at an at the money option. Okay, like I said, and this is you can see it's I'm looking at going out 4 weeks. For a variety of reasons. I just want to give this a little, I want to be able to put myself in a position where I can adjust the trade to a certain level, to exit at a profit on some of them and then let the rest ride. Okay, so I'm going out 3 weeks in this case. You're going to have to make that choice yourself, and you can see that the mid. Okay, this is the bid, this is the ask, and this is the mid price. Okay, we have the delta right here. This is the only thing I'm looking at. So I'm going to choose either and the stock, as we remember, it was 1569. So I want to go in at the money option that's going to give me the best bang for the buck. And again, my personal criteria is I want to trade a delta between 40 and 70. The 62.99 corresponds to that. The 33.95 does not. Okay, so it's out of the money, and the deeper in the money, the 15, is too much. Okay, so this is why I choose that particular option. This is me personal. That's my choice. So we go in and say, okay, I'm gonna have a $5,000 account, and I'm gonna buy 26 SLV, October 27, 1550 calls for 37 cents. So I got a total amount of 962, and this is the risk graph. Now, when I talk about Greeks, all of those Greeks go into these lines. This red line is going to be fixed point in time. The red line actually is today, or it's the 4th when the trade was made. And you're going to get a curve. Okay, that's really all you need to know. You don't need to know more than that, other than the fact that you chose a delta that fits within your comfort level. And then I chose also an option that's going to decline in value based on time at a very, very slow pace. So what's the, oh, I'm sorry. So now here we go. We add that into our trade plan. Okay. The trade plan is here, and you see it noted. So there, what happens then, I made the trade, I print this off, and it goes up on my wall into my active trades. And you will see my wall. My wall has, usually does not have more than 4 active trades in it. It's a rare case that I have 4. It's usually more 2 or 3. And it goes there. And then I got another section, completed trades. And I do that for the week, and I put there. And then at the end of the week, I assemble them, and I make sure that my records are straight, because I want to track all this stuff. Okay. And we have heard this expression before, plan your trade, trade your plan. This is what you do, okay? This is how you be organized. And I know it's tough for people to be organized, but me as a kind of a natural ADD, attention deficit disorder type of guy, I need to force myself to be organized. But by forcing myself to be organized, this is how I actually keep myself on track and keep to the rules, okay? So this is actually wrong. The closing price today, SLV, so this is actually the risk graph of that particular options trade today. SLV actually gapped up today. You can see that right here. SLV gapped up. It went up. And at one point, the option was close to 20% ROI, but it didn't quite get there. But then it came back down, and the price of the option actually ended up at exactly 37 cents. So right now, as of the close today, we are at break even. It did not hit the 10% loss, so I'm still in, and I'm waiting for Friday, okay? My trade plan states, what am I going to do? Well, I'm going to give this until Friday. So I'm going to wait today. I'm going to have my order in for 20% gain, and I'm going to watch it. And if it hits 10% loss by the end of the day, or maybe a little bit more, I'm going to get out at the end of the day when I wake up in the middle of the night to make my trades. But my order in for that 20% ROI right now is right there. My order is actually in to sell 20 at 45 cents. Okay, so that's a trade plan, and it's very organized. So let me just ask. I'm gonna ask the question of everyone out here in chat: how many people do a trade plan? Oh, you can have this on TextPlay, but I'm gonna present that. You actually have you have a template right here. The TextPlay is going to be the same trade plan every time. You're just going to write the price in, but you're going to post. I'm posting those on the wall. I'm still posting them in the wall. Okay. I do this for every trade, every single trade, guys. I make money in the market. It's not just because I do this that I make money in the market, but I can tell you what, this keeps me on track. It keeps me on track. And so it's really kind of the fine detail of what successful traders do. I don't know many unsuccessful traders that are unsuccessful but still do this. Okay, if you do this, it really keeps you on track. Let's take a look at the chat real quick. Okay. So I highly recommend it. I don't know if Greg does this, but Greg is a walking computer, so he probably has it all in his head, despite his English language capabilities. Okay, so let's make sure the time is okay. Yes, it is. Okay, let me show you a couple other trade plans. NVIDIA. This goes back to September 18th. By the way, this was in the chat. It was in the chat. And I'm seeing in the chat, to the moon, NVIDIA is going up. And here it is on that day. Move my video here. I don't need to see myself. To the moon.
And that's the price right there. And we had these channels coming out and everything, and people are going in. It's like, okay, well, let's, you know what, instead, guys, of saying to the moon, challenge yourself to put a trade plan in. September 18th, time, 14:30. NVIDIA closing price of that day is going to be 187.55. It's going to the moon because I'm going to do a long call. So we're going into NVIDIA, October 15th, 187.50 calls at the money. Position size, all in, baby. 10 contracts. I got $5,000 bucks. I'm going to make a fortune. $4.88, and that thing is going to go up. I'm going to get out as fast as possible because, and why is that going to happen? Because the guys in chat thought it was going to go to the moon. So what's my technical stop? None. It can't lose. What's my technical target? Well, darn it, this thing's going to 200 easy. So I don't need a stop loss, but maybe I might have one. But no, I really don't need it. My profit target is I'm going to make 200%. I'm going to make a two-banger. Time stop? Well, of course, when I get my 200%. I know we have all made trades like this, but when you put your reasoning behind what you do in a trade, you see that it looks ridiculous. You know darn well this is ridiculous, okay? And I guarantee you, I saw people in the chat making this trade based on this right here. I saw it. And you know what? I didn't really say a lot. I said, are you sure you guys want to be talking about this stuff? I mean, it just kind of gets this momentum thing. But, not everyone in chat knows what they're doing. Just because they're prolific writers in chat doesn't necessarily mean that they know what they're doing. If you are disciplined and put a trade plan in and have very good solid reasoning, you're going to see that solid reasoning in the trade plan. Okay. I'm sure there's a couple of ha-has. Okay. Oh, double down. Yeah. Okay. There are some gaps, by the way. I know there are gaps. Okay. We strive to do this as much as possible, but just keep straight and just do it. Okay. So let's look at this trade. Let's look at it. Okay. Here's our trade. So our trade is on the trade plan. We get in for what I say, $4.88. We're right there. We're hoping it goes to the moon. We want it to go to the moon. And we want to get out at like a huge profit, right? Well, here's the next day. Here's the next day. Guess what? The price has come down. The price has come down. Sorry, okay. The price has come down, sort of. But it gapped back up, but we lost some volatility and the price shifted that way. Okay, we're actually at $1,000 loss. Okay, and then we say, oh, you know what? I was wrong. But look, it's a green candle. It's still going to go up. Boom! It goes down again, and now we're at $1,700 loss. Okay, but we had a trade plan. We had our trade plan. What did our trade plan look like? Our trade plan looked like that. And you know what? Our trade plan was not realistic. So having these trade plans is a very, very good way to keep yourselves honest and not make silly mistakes like this. And you know what? I know people lost money in chat. I know there are some people that lost money on this. And it's just not acceptable. We don't want you guys following stuff in chat because of the hype. Okay, it's the hype that actually is what we call hopium. This trade is a hopium trade. Okay, so now let's go into a chat trade. I don't know if you can see this because of my video. So this is a chat trade that happened way back when, back on June 12th, towards the end of the day. And there's some technical reasons that actually make this probably a good trade. I don't know why Steve was in this, but I know I would have my own reason for being in a trade like this. My reasoning is you can't see this right here. My reasoning is you got a Bollinger Band up here. You're way below the Bollinger Band. you've actually had a huge tail, and that tells me that we're going to at least try to come and test the we're going to try and test the Bollinger Band. Okay, but so let's just treat it as a text play. Okay, the text play, and here's your template. Okay, here's how you have a trade plan for a text play. Because the second you get yourself into the text play, you just insert what the option is, and you print it up and you put it on your wall. Okay, so we are June 12th, towards the end of the day. Apple is closing right around 145.42. We're doing a long call. Steve's got a long call, and we're going to go into a 623, so a couple weeks out, 146 call with $2.23. We're going to position size at 20% or less of our account. It's 4 contracts, which, by the way, allows us to have a little bit more stop than 10%. The entry trigger, well, here's our entry trigger. It's a text play. The rationale for entry is that Steve's text plays have a track record of being very, very high probability. In fact, probably 75, 80% of them are correct. Do I have a technical stop? Well, not really. Our technical stops don't really necessarily exist with Steve's plays, but our technical target, definitely for me anyway, is that lower Bollinger Band. Okay, you saw it right here. That's my technical target. And the stop loss is going to be 10% mental, and I've got a profit target of 20%. Okay, now on this day, I think we're like on a Wednesday. Personally, I always like to have a time. I always like to have a time stop, at least for evaluation. Okay, and then also, this is my own personal style, especially lately, is I really like selling a partial of my contracts and then setting a trailing stop for a break even for the other ones because it might run. And this allows me to make more money. But also, if it does happen to get stopped out at my break even for the remaining 25%, I still made money in the trade. Okay, so this is a trade plan for a text play. It's a template, but every time I go into a text play, I can tell you right now, I print this up and it goes up on my wall. Okay, it goes up on my wall among my other 2 to 4 trades that I have going on, and then I know what I'm in. Okay, any questions at this point? Probably not. You know, I'm sure you guys are all saying, God, this is so organized and it's so straightforward. It really is, but we are in a business, guys. We are absolutely in a business, and you need to treat trading like a business. And a business records its sales. It also records its purchases. And at the end of the day, they consolidate it and they put it into, and I see this in the chat, keep a trading journal. That's exactly right. I do keep a trading journal, and I'll show you one here in a second. But it's very, very important as well, because then you can also write notes about what you did and what you didn't do. Okay. By the way, this text play, I can tell you that this text play, this is the risk graph of the text play in Tom's Options Tools. The text play, what happened is that the call, it opened on this day, it gapped up, and it gapped up to 277. We were in this originally for, let's see, what was it? In this originally for 223. We were in this for 223 buy. And the so I just got to make a quick calculation here. 2.23 times 1.2 is 267. So we actually gapped up, and the options price was over 20%. So in the options player's world, we would have taken our profit at the 277. Okay, and we would have gotten more than 20%. Okay, and then it did increase to 282, but then obviously you can see the red candle started coming down, and that particular option on that day actually closed at darn close to break even. Okay, a little bit loss, like 1% loss, but by keeping the rules, we made our profit. Okay, and we got in, we got out. Okay, we got more than 20% profit. Okay? If we did not have a trade plan, if we didn't have a plan, and we just let that thing go, we would have said, "Oh crap, I had all that profit on the table, and now it's gone." Okay, that's why we have a trade plan. We already know what we're going to do in advance when we actually get into a position. Okay, and the last word, and this is in the chat already. Keep a trade journal. This is mine. I put a couple of them up on Google Docs, and people have access to them on some of the systems that I run. And you can see this is my system on Apple that I'm running right now. That is loosely based on Green Goose, and part of my trade plan on Green Goose on Apple is to exit 75% at 20. I'm experimenting with 25% as well, but I'm exiting on 20% ROI on a partial, and then the balance on a trailing stop. And the count as of actually this morning, your morning, is almost double in 13 trades. So, and that's Green Goose. The next course, by the way, the next 6 weeks course we run, we are going to not run on IWM or SPY. We're going to actually run it on Apple. So if you're interested, we'll have some announcements over the next week or two about what we're going to do on that particular course. So again, to repeat, what is our overriding goal at Options Players? First of all, we want to teach you how to lose money. If you haven't heard this in this session and the first session about this, if you haven't gotten this, then go back and when we get the recordings out, watch it over and over and over, and then watch this one over and over and over. We want to teach you how to lose money, okay? Plan your trades so you don't lose more than 10%. And also plan your trades so you don't lose more than 2% of your account. So I'm kind of making this backwards. We also want to teach you how to stack your gains in a consistent and sustainable manner, okay? And so we trade your plans so that you take profit at 20%. Just an example of the previous text play. You do that, and you've got gains where people who waited don't have gains because that's what you planned for, okay? Very, 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 very important. If you do that over and over and over, just as in the first session, and you are trading 20% of your account on these text plays, or 15 or 10 or whatever, you will gain a lot more ROI than you would ever get anywhere else. And it keeps all of us here at Options Players sustainable. Okay. Anyway, that is it almost concludes our session tonight. I do want to just very briefly look at the latest charts. Actually, let's just see if there's any questions on this. If there's questions, put it in chat now. And I'll address them, and otherwise we'll just look for just a couple of minutes, then I'm going to have to get going. And then we'll just take a look at a couple of the major charts. Not anything fancy, but just kind of look where we're at. Roman asks, when do you do the planning? How long does it take? Do you miss a trade due to planning? Roman, I spend more time planning and doing R&D than I do trading. I probably spend 5 times more time planning than I actually do trading. I know what I'm going to do in advance. And it's not necessarily about finding tickers. It's about finding a way to wait and to be patient. I put something in chat in my my blog on my website about GLD. I love trading GLD. It's got some great movement. I can usually make money, but I'm finding the support and resistance lines, and I'm waiting, and I'm planning based on that wait. And then when it happens, I already have my trade plan in place in case it happens. My trade plans are actually already written before the market opens. Okay, so these trade plans should be written before. I mean, like the Steve's chat play, you should already have that trade plan written, and all you got to do is after you make the trade, write in the info, print it off, and put it on your wall. That's what I do. That SLV trade, I'll be honest with you, I am in the trade. I did not enter on the 4th. I identified this as an opportunity after market close, and I saw the price was 37 cents, and I put an order in. For 37 cents, and I said, if it fills, it fills. If it doesn't, it doesn't. Well, it actually filled towards the end of the day today. So I'm in that trade for 37 cents. And I do have that same trade plan. I'm not expecting to be in that longer than one day. Now, this is not to say you guys should go into this, okay? I don't think you should go into this trade because it's
Can you guys hear me? Okay, good. Sorry about that. The phone just went dead. The Zoom actually has great service. You can call in on a local number, but they don't have a local number in here. So I was actually calling into Singapore. They cut me off. So sorry about that. I've lost track of what I was talking about, but we're towards the end of this. So I just wanted to real quickly go through the charts. Oh, I know what I was talking about. I was talking about I put these trade plans in place before the market opens. So I was in that SLV trade. I had the order in. With the gap up, I didn't think it was going to fill, and I just actually when I woke up at 3:45 a.m. I noticed, oh wow, it filled. Cool, okay. But I'm still following the trade plan. So I sometimes will actually put trades in before the market opens based on prognosis, based on TA that I do after market hours. Okay. So just real briefly, this is SPY. It continues to go. It's just really amazing. You know, they always say the trend is your friend. Well, it just keeps going. It broke that resistance, and it's going up. I don't know how far it's going to go. I don't know where it's going to stop or where it's going to start coming down, but it's going strong. Okay. You know, it wouldn't surprise me if we gap down just a little bit, but then keep going back up. IWM, well, we're finally starting to see signs. IWM actually led SPY in its advance, and now we're starting to slow up. So you see a couple of red candles, and kind of like a doji today. To be honest, I bought calls. I bought calls towards the end of the day, and as it zoomed up after hours, up at 4:15, I also bought puts. So I'm in kind of like a funky little straddle thing, but which probably will not lose money depending on it. Really doesn't really matter which direction it goes. So, but could be starting to roll over a little bit on IWM. Apple. Apple. I bought calls at the end of the day for other reasons, but you know, this 155 area has demonstrated resistance, and just because it breaks it doesn't necessarily mean that it's going to keep going. I don't know what's going to happen, but we need to watch out. You know, don't just assume that this is going to go to the moon. But Apple is interesting. I think everyone was happy that it went up. I personally made 50% today on Apple. And if you go to my website, there's a link to my Apple system. You can see where that's at. I exited a portion, 75% of my calls. near open, and I put a trailing stop, and eventually it got stopped out with a little bit of a decline, and my total ROI on the total trade was just over 50%. So I was pretty happy about that. And I'm in calls again. Facebook is interesting to me. You can take a look at this for whatever it is, but there's kind of like this diamond shaped thing, and I think a big question is it gonna go up more, or is it gonna go down more? I'm not in a position. I don't really trade Facebook too much, but you can draw your conclusion. But Facebook had a strong day, but the question is are we going to have that upper resistance, the resistance? So who's drawing that? That's Greg, I bet. Down. Yeah, I mean, if I had seen this at the end of the day, I can tell you right now, and I had some free cash, and I was only in a couple of trades or only one trade, and I was looking for one more trade, I would have definitely bought puts on this. Absolutely. It's clear for me. I think we're gonna trade between these areas, and then we have earnings right here. And who knows what it's going to do on earnings. I will not trade this over earnings. So that's Facebook. Okay, so coming to a close. Now we've been almost exactly 1 hour. This is the second session, and I think I'm looking forward to not losing my voice over the next one for session 3 on Tuesday evening. Greg will get that invite out. We're going to go through more of the money management, that he's going to really focus on the basic TA. I've seen the whole plan for the course, and it is damn good. I actually had to revise some of the stuff I did to come up to his level, because it's just so good. So I'm really looking forward to Tuesday next week to sitting in on that, because I always learn from Greg. He's got a different approach to things the way I do it. So my website is it's just a blog, but it's ricepiratetrading.com. So I'm just having fun with it. I'm actually using it to teach my kids probably more than anything, but we're also kind of using it as more of a general kind of, here's what I think is going on, and using it to challenge my own creativity. So that's that, and I think we all thank you for sitting in on this and being part of these live sessions. And for those of you in the recordings, hopefully you'll enjoy this, and it'll really set you straight, and you will be able to go forth and prosper in options players. And we will close it off unless there's any last burning questions. Doesn't seem to be. Okie dokie. Well, I am going to get myself packed. I've got to go to a water treatment plant and go see that, and then I'm going to rush off to the airport, and I'm flying back to Malaysia this afternoon, and I get to have a weekend. So have a great evening, everyone, and hopefully you have a great trading day on Friday. It's my favorite day to trade.